Thank you everyone for joining in. I hope you find this session a little bit informative, and thanks Sharon for inviting me and having me over. Um, so I think what I'm going to do now here is that I'm going to talk a little bit about the fintech sector. I'm going to talk a little bit about how it's evolved and what's been some of the things that have kickstarted the entire thing. A lot of the stuff you might have seen and might have read about. I'm. It's not new material. It's all there. I've just sort of put it together in a way that explains the narrative. So, you may have heard about some of these things in a in a in a through your readings. But what I'm going to try and do is I'm just going to piece together the entire thing so that it seems like one narrative of how is growing or not growing, and then maybe we'll talk a little bit about what our journey has been, and then maybe wrap it up by talking a little bit about how your journey, in case you're looking at entrepreneurship in this space at all, or maybe looking to maybe move like maybe a switch, uh, right? What you could do is since it's a little bit difficult to do maybe on the spot Q&A with a large audience. So my suggestion is that please enter your questions or have it ready along the way. You might forget slide 1 by the time you get to slide 20. So just keep your questions on, and you can see you can ask me those questions towards the end. I'm more than happy to answer them. Okay, now with that, let's get started. Let me tell you a little bit about myself before we go down. So I'm a mathematics graduate. I passed out many years ago, almost now seems like 20 years ago. So I did my BSc maths from St. Xavier's in Mumbai. Post that, I worked in the advertising industry for 5 years. So I've had a chance to work with good brands on the marketing side of things, which was Stanchart Bank, and did the first Stanchart Mumbai Marathon in Mumbai. But I was a kid at that point of time, so can't say that I did it all. Post that, I went and did my MBA from the Indian School of Business, Hyderabad. Wanted to stay in India, so it was an easy decision for me to go to ISB and not look anywhere outside. The opportunity in India was just like going to the roof, and it's been now 15 years, and you still hear that the opportunity in India is still going to the roof. So it's in 15 years that narrative has not changed. So that continues to be the case. Post that, I worked in the telecom sector for about another 5 years. I worked with Bharti Airtel as my last role. I did acquisitions for all Airtel products. So if you guys use Airtel, definitely in Karnataka, Bangalore, and you don't like it, please don't hold me responsible. I left Airtel many years ago. But yeah, I was part of the team, did sales, distribution, product, marketing, on-ground retail sales for all products, prepaid, postpaid, data cards, DTH, broadband lines. It was a great experience. I think a lot of my learnings, a lot of what I do in my startup and general business thinking, I think has come from what I've learned in my years at Airtel. It attracted the best minds at that point of time. I remember, having a conversation with my CEO who's now moved on, and I met him at an airport and said that, what attracted, or why did Airtel do so well? I think the point was that it attracted the best minds. I think that sort of continues. That's good. 2012, I had this, more like a epiphany of sorts to say that, the world was changing very drastically. I had, graduated out of campus in 2008, and I felt like I was missing an opportunity. I almost felt that I should have started something right out of campus. And it was now 2012, and you'd hear stories about Mr. Sunil Bharti Mittal and how he built up Airtel. So I got inspired. So I said, let me start something of my own. And I met my co-founder in my current company, my co-founder Kunal, who's also an ISB graduate. He and I, in 2012, we met. He was already an entrepreneur by then, by the way. He was out of campus. So he was working on some service related products in the education talent space. We got together and said that we want to productize their entire piece. And I think from 2012 to 2013 is when we actually spent 1 year trying to build the product out. Uh, I used to come back from my work, and he used to come back from his work, and we used to meet late at night after dinner, and then work till about 2, 3 o'clock in the morning. We did that for a year before we then raised a small fund, and I quit and then started that company. Did that company for about 2 years. It was maybe an ed tech company too soon. There was no concept of ed tech at that point of time. But today, a lot of these models you see happening. Um, couldn't make it very large. Learned a lot, but we didn't have the. I don't think that we had the right idea or the business model or whatever else, however we call it. Right, mobile internet was just taking off. Apps was not that big. Still on websites as much. So 2013 to 15, we ran the business. We worked with the government of India. We turned profitable, which is a big thing for us. And 2015, we had expanded to Singapore and Philippines and a couple of other markets. One guy said that, I like what you guys are doing. I want to buy your IP out. And we said, okay, no problem. We sold the IP and we returned the money for our investors. And then 2015, the two of us were joined by a third co-founder, and we started MoneyTap. So MoneyTap was our first product that we launched in 2016. End 2016 is when we launched the product. It was a credit product. It was purely a credit line where you gave consumers credit loans, etc. And now we have rebranded to Freo, as you can see on my screen. Freo is, we've gone beyond credit. So credit and MoneyTap continues to be the credit vertical. But over the years, we've come up with other products that the person may need in their life from a financials perspective. So their relationship with money, be it credit, be it deposits, be it cards, be it pay later solutions, be it insurance. So we offer all of these, and that's the reason why we moved to become purely just a credit product to becoming a neobank, and that's what Freo is. So that's my full journey. I thought it might be interesting to maybe quickly walk you through what have been my influences along these years that allows me to talk a little bit about what I'm going to talk. I think I don't need to maybe explain this. I think this is very straightforward. That digital is here to stay, and it's just taken a leap forward over the last 2 years, right? Whether all these companies on the screen that you see, they own zero assets or own zero inventories, and yet they are like some billion-dollar companies. Stock market aside, going up, going down, forget that. I mean, there's certain value that they've created which is higher than most, and they don't own a lot of these things. The other names that come to mind, but typically these digital has what service really helped. And the last 2 years, the joke in the financial industry in India has been that COVID has been the chief digital officer for most banks in India, right? It's like being that, it's forced people to adopt digital and adopt digital products. And it's very true when you see that happening significantly. And, it's happened in the past, and it's probably happening at a faster pace now. But the only thing that I would probably leave you with is that the question is that, are banks going to be next? Right? And it's not a straightforward answer, right? So I have two charts here, and slightly older. On the left-hand side is a proper bank, Movin Enterprises, and the right-hand side is the, it's a startup called Lending Club, very old startup in the US. You would expect the bank stock prices to go down while the fintech stock price to go up, but that's not the case. And these are not right now. This is probably like maybe about a year ago. So the banks are next, but I don't think the banking sector is worried right now as much as thinking of more as partnering with fintechs rather than saying that one is going to disrupt the other. That is going to be a very different ball game, as you can see from various stock prices. But this is a chart of Wells Fargo, which is a bank in the US, and all the products and services that they provide to their customers. And these are all startups that are micro value proposition of. So if you can see the buying a house, which is easiest to read, there are like some 6 startups there only, which are trying to disrupt that one little thing that Wells Fargo does, or make savings money simple, or everyday checking, or make and receive payments at the bottom. If you see, financing and credit. If you see at the bottom, like there are tons of these are all real startups looking at Wells Fargo and saying, "Hey, just too big. Let me take each and every one of your arms and just create a better arm of it." And it's disrupting it. So we call it a great unbundling of finance, but it's a cycle, and you read a lot about it, that things first go up, they first get unbundled, then they get bundled, then they get unbundled again, then they get bundled, and this has happened across the globe, right? First there was retail, which is bundled. Then came, yeah, various different very niche e-commerce site for doing very specific things, so they unbundled it. Then those individual e-commerce sites got all the other verticals, so they bundled it. Now you are seeing, then they got individual big e-commerce sites that happen for different areas and geographies or locations, or with willing value proposition. They got unbundled. Then you created a service on top of them to say that, what, I would search on my app, where can I buy this suitcase, which is the best e-commerce site. So again, it got bundled through one service. This is a constant cycle that you will see, and as you think about finance, and as you think about working in different kinds of companies, working in different kinds of maybe younger companies, it is always going to be a case where a bundling and unbundling is a kind of concept that will keep happening, and you have to find, maybe is this the right time or not, right? Sometimes it's the right time to go and unbundle a particular large player and then very good, very deep in that, and give the right kind of products and services. Sometimes it's not true. So that's a little bit of a cycle that you have to keep managing as you go along. The Indian fintech market is growing like crazy. It's I don't really need to talk about how the growth has been, whether it be the startup community. And fintech is essentially fin and tech, right? So it's not and we joke about it. It should be tech fin, not fintech, because it's technology first, right? But the fintech is that the large part of it is regulated. So fintech, therefore, by definition, becomes a lot of these startups or the big ones now, and it is really going through a tear. But if you look at the comment at the bottom, a large portions of transactions still happen in cash, even though UPI is like huge in India, right? Digital is just going to the roof. But that is where lies the opportunity. The minute you don't convert every cash transaction into digital, there'll always be an opportunity that will exist. If you look at some of the macros, right? Like look at what's happening with the government services or kind of the digital services. This government, and I'm not getting into political debate, but this government has been pushing the digital agenda like massively, right? Aadhaar was started many years ago by Mr. Nandan Nilekani, and it's changed the face of how we look at things in India, right? And now it's a huge push by the government to get people in the formal financial ecosystem, right? Everybody benefits when more number of people are in the formal ecosystem, not in the informal ecosystem. And lending is a classic example wherein a lot of the lending happens informally, that you go to your local guy and you borrow money and he charges you an exorbitant interest rate. He knows where you stay, but because the bank is not giving you credit, so you have no option, so you have to go and borrow from a money lender. But getting more people into the formal financial ecosystem is generally beneficial, and the government has taken a huge amount of steps to try and transform that, at least from their part. They can't force you, but at least they convert their own transactions into digital, and that's been very good. And what's leading to this change, right? I think this is happening for quite some time, right? So a lot of the work that's happening on the tech side, on what's happening with the cloud, where you don't have to, cloud is, what I mean here, cloud is not, what you think about cloud, but cloud is helping you to not have data centers. So if any of you remember, I don't know, maybe what's the age of this group, but having servers means that you had to physically put servers. So if you were in an old company, say if you're in Airtel like me or somebody else, there used to be a very cold AC room which has only got computers, and you see that in these spy movies, and they go and change these boxes. They'll take out a disk and put it inside. All those all data centers, right? So there used to be physical data centers that had to be put up across the globe. The minute you converted that into a cloud kind of a scenario, added data, AI, ML, this has helped huge amount of cost reduction for people, right? Add that to mobile penetration and no having physical need for branches. Of course, there are branches, and of course, banks are forced to do it. But having the mobile penetration is allowed you to not physically go. This has led to a massive amount of disruption and a level playing field, right? This has allowed you to build on what's been the UPI or the India stack. Now, uh, where the entire India stack sort of really came about was something which we call as the Jam Trinity, right? So, what does the Jam Trinity stand for? J is for Jan Dhan Yojana, A is for Aadhaar, and M is for mobile internet, right? So, what happened many years ago is that the government pushed people to open bank accounts, which is the Jan Dhan Yojana accounts. 800 million people in India have bank accounts, by the way. We are probably the most banked country in the world. Maybe not, some of the developed companies are slightly higher, but of course not all of them are funded or they're not active, but people have bank accounts, right? Jan Dhan Yojana was that. Aadhaar allowed you to have an identity that got created so that you could open the bank account and you could do transactions. And M was how mobile internet penetrated. And as entrepreneurs, we should all thank Mr. Mukesh Ambani for launching Geo and reducing the cost of internet for everybody across the globe. Now people could have apps. Now people could download, watch streaming, etc., 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 and that has led to a, just an explosion of products and services on the mobile phone, and all this has led to finance becoming very, very accessible. And the enablers of all of this has been the entire India stack. I just spoke to you about, 2 slides ago. So what does India stack entail? There's a little busy slide taken from one of these reports. At the bottom layer is Aadhaar, right? And what does Aadhaar do? Aadhaar means it is paperless and presenceless. I mean, we all know what Aadhaar is. All of us have Aadhaar. But what it really means is that your identity can be validated without you being physically present or you having a paper. That now you suddenly, if you think about it, and you start thinking about applications of what you can do of being presenceless and paperless, suddenly it transforms. Aadhaar just suddenly does not become like a card that you carry, but it can, in a digital world, it makes you identified in a paperless and a presenceless manner, right? That was the original thought of it. You layer that with a cashless layer of UPI. So because movement of cash, movement of money, movement of value is important for economy to run. On top of that, you'll create issues on how you can create lending products, insurance products, whatever you do, but movement of money is important, right? So the cashless layer came on top of that. Another layer on top of that was the entire consent layer. Consent layer means that I have my data, right? Whether it's my bank data, my health data, my insurance data, based on my consent, which is validated, presenceless, paperless through Aadhaar, I will give you access to my data, right? And the last layer is the credit layer, which the government has just announced, and we'll see where it is, which is to say that, it becomes like an open-ended credit, like a platform for everybody. But the Jam Trinity, which is the Jan Dhan Yojana, Aadhaar, and mobile internet, layered or coupled with the entire India stack of being paperless, presenceless, then having a payments layer, and then having a consent layer, then having a credit layer, maybe more, what's more, this is what's led to the complete explosion of finance in India. And Mr. Nandan Nilekani gave a talk recently, not recently, maybe many years ago, where he said it's like the WhatsApp moment of finance, right? Which means that over the last 5 years, you've seen the explosion of finance and financial products, and all of this is led by fintech, right? Banks are also doing it, no doubt about it. I think the banks are one of the smartest people out there, but their culture, their DNA, their what regulatory environment is very different. So we believe, at least at Freo, in partnering with banks, and banks love to partner with us because we bring two different sides of the table to the customer. And the same presence layer, cashless layer, UPI, consent layer is being also used by banks. Right? It cannot be done without the banks because it's a bank account or it's my bank statement that needs to go to somebody else. So the entire industry benefits, and fintech is sort of leading the charge in some ways. Now, if you think about the adoption stock, this is what I just told you is how the industry has moved. and how what's happened in the environment over the last few 5, 6, 10 years that has led to this point that we are in. Now, if you look at it from a customer's lens, right? Typically, the financial adoption stack for, especially for a middle income group, like all of us have, you know, we have grown up in middle class Indian families, uh, but all of us have go through this cycle, right? First, you need to open a bank account. Think about it when you were a kid getting out of college. First thing that you did was to open a bank account, right? You needed to get your salary, or even when you were in college, you needed money from your house, so you opened a bank account. Once you figured out a bank account, now you needed to move money. Now UPI has come and solved it. That's a different issue. But before that, it used to be RTGS or NEFT or IMPS or whatever else, where you used to transfer money from your dad or mom to send it to your house. You used to pay somebody else's fees, or you're giving it via check. There were money movement that needs to happen. Now that you figured out how you do money movements and so on and so forth, now you want to move up in life, right? So that's where you start adopting credit. Credit could start as very small cards, or take small EMIs, or take these 0% products that Bajaj, anybody else gives in these chroma. So where you buy a mobile phone, or a refrigerator or whatever else. This is where you start saying that, what, I've done okay. I have a bank account. I know how to move money. Now maybe I need credit to move up, or I need to credit for my business. The next layer is where you start thinking about insurance and wealth, wherein you figure out how do you protect your life, protect your family, and you want to grow. You want to deposit, you want to invest your money, whether you start by investing in mutual funds or stocks or crypto or whatever else you like to do. And of course, there's forex and slightly more funkier financial products. But roughly, this is how any consumer, all of us on this call, think about it. You would have traversed this journey in this order, give or take, right? So the consumer is always thinking from a perspective of, how do I get all these financial products to me at some stage? And this is where lies the opportunity. And that's what fintech has looked at, each one of them. How do you open bank accounts in a better, smarter way? How do you get payments done? Payments now, obviously UPI leads, but so many of the payments like Razor Pay or PayU or Pine Labs, the POS machines, all these companies have grown significantly because they solve for SMEs and businesses collecting money for consumers, which otherwise it would be cash transactions. So payments, not just UPI where I'm transferring from person to person, but even at a business to business level, the payments has taken off massively, helping move money. And then credits, it's a ton of opportunities. We started our business in credit, and now we've gone leftwards and rightwards. There's a lot of companies in the insurance space, et cetera, who are figuring out, how can I ensure that more people in India take insurance? So this is typically how you would see a customer's journey evolve from their financial life, right? I think these are very straightforward. At the heart of everything, whether it is actually a bank or whether it is more like the banking service on the app, the pain points are very similar, right? I mean, I want to physically walk into a branch and then I don't know what's happening. And think about it, 65% of bank deposits actually sit in public sector banks, right? So those people, even for figuring out what my bank balance is, have to walk into a branch, and then they have to go get their physical book, that passbook printed, to know what it was. And I used to do it in college. Every time I want to know what my bank balance was, right? So what does fintech really mean? So if you think about it, and any customer, um, he has an income, or he or she has an income, and then he or she has its expenses. Sometimes there is a deficit, which is that I need more money. Sometimes there's a surplus, where I have extra money, right? These are the four functions that a bank typically does, right? Now, in a bank, it's probably, it's fossilized in some ways. Like, one is called debit, one is called credit, one is called assets, one is called liabilities, etc., 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 right? So the income is where you deposit money, expenses is where you go spend money, whether it is through cards or anything else. Deficit is when you need money, which is where you need more money. That's why you take loans, or you buy a home loan or a car loan. Or you have a surplus, which means that I have an extra money lying around. Let me invest it in mutual funds or whatever else, right? Uh, And typically, I think this is what, you have savings products where you are, or investments products, you have spending products, and you have borrowing products, right? And in a bank, these are in some ways fossilized, right? They don't necessarily talk to each other in a very smooth, where data is used across the board and cross selling easily happens. Otherwise, it's not a call center kind of a model. And fintech typically aims to unify all of this, right? So the person has like a one login, one view, one app to ensure that, or even if it's multiple apps, but if you have like a your profile and your data at the back end is one in some ways. And I think that is what fintech ends up being for everyone else, and that is what way you should think about it, right? Again, I picked this up from somewhere. There's tons of data available, but if you think about fintech, there are subsectors, right? So payments is one. Within payments, there are platforms, payment gateways, POS players. POS machines are those, those machines that you go and swipe at the counters. Then within credit, there is consumer credit, there is SME credit, there's P2P credit. Within consumer, there is lending, there's BNPL, there is cards. I mean, each of these I could go into detail. SME, there is a business loan, there could be business financing, there could be supply chain financing. P2P is where you do lending from person to person. So I lend you money, but it's done through a platform. Then there are neobanks, which is that banks that offer banking products and banking deposits, consumer focused, SME focused. Insurance is like a big fintech area where you could be an insurance yourself, like maybe a Digit or somebody, or you could be an aggregator, like say Policy Bazaar or um, Acco for that matter, right? And then there's wealth broking, wherein you do broking, which is essentially you help people invest, or you do wealth management, which is more like advice. And each one of them have subsectors. Right? I've not covered crypto or any of the other forex products or those kind of things, but typically these are the subsectors that you see across fintech, right? And each one of them is seeing disruption like crazy. You pick any sub vertical, and there'll be like a within this also on the right hand side there are some sub vertical that you can pick up, and that's the great unbundling of a bank in some ways. In India, for example, I said that it's a very large market, right? So the middle income group is really where the next set of financial products is sold. The government and for the economy, it's always better that more and more people come into the formal financial ecosystem, right? Not in the informal ecosystem, right? Now, as you go from the top to bottom, the percentage of people going into the informal ecosystem increases, and that is the opportunity also. And QR code is a big opportunity, and it's a big enabler, right? In like what happened in China with WeChat, everything runs on QR code. India also, everything runs on QR code, literally. This is a little outdated number, but in $150 billion of transactions, worth of transactions on UPI every month, while credit cards and debit cards about 15 to 20 billion. So it's like a 7x difference. And cards have been there for like some 20, 30 years or 20 years, and UPI has just been for 10 years. And there's a 7x difference in volumes. And the reason for that is that the UPI has just made it so simple for people to transact. It's not like only for the wealthy or for the upper income guys, but it's for everyone. And this is what's leading the kind of the digital adoption of finance and digital adoption of financial products and fintech is going because of these reasons, because the middle class population has to pay a price to adapt and accept financial products, right? You and I all have a relationship manager who will call us up every second day, sir, aapko kya chahiye? But think about a middle class Indian guy. He has to walk into a branch, take leave from his office, go fill up paperwork, stand in line, not understand cannot do it at the time when he or she is free. And half the time these apps don't work. So I mean, I love HDFC Bank. They're probably the best wealth creators in the world. But it's true. They got banned just because they didn't have a proper digital product which was servicing the customers. And there's huge opportunity still after all these years and all these banks and all these players. India still sees a very poor GDP debt to GDP ratio, or credit cards are just 35 million people cards in the country, which is like less than 2%, right? So the opportunity just continues to be way high. And And banking is seen like a, you know, it's just seen like a wave, right? So pre 1990, all the banks were just public banks, right? They were public sector bank controlled by the government. 90% of the deposits used to sit in the public sector banks. Post 1990, where the entire wave of reform came in, they allowed the private banks to come. So the last next for 35, 25, 30 years, they took away market share of 30-35%, right? HDFC, ICICI, Kotak, they are like big beneficiaries of that, created genuine value. So in the first phase, it was as I can just store my bank money and you keep it safe and just don't cheat me. Was the only expectation. Then the private sector banks came around. They created bank branches, phone branches, cards, ATMs. You could walk into a bank and it would be an air conditioned bank, and everybody was damn happy about it, right? And now you're seeing that post 2018, 19 is like the wave of neobanks, right? Wherein we are, at least like one of us, we are trying to figure out that how can we give all these products and services on an app. The guy does not want to walk into a branch. He does not want a phone call from the guy. He does not want to get calls to for sales, but he wants all the products and services. Just because I can get groceries and a cab and movie tickets on a click of a button on my phone, why can't my relationship with money also be on the phone? And that wave of banking is also becoming better and getting more and more evolved as we go forward. And we have seen this neobanks across the globe. I think I'll skip this part, but suffice to say that there are many models of neobanks across the globe, and people start somewhere and then they become. So you can't start becoming a bank on day one. You start with credit, you start with payments, and then you evolve into becoming a bank where you offer all these services to the customer. It's a massive, massive opportunity. We're still very far behind between in terms of adoption of financial products. We are very far ahead in digital, mobile, etc., etc. But we're still very, very far behind on the adoption of digital financial products, and still people are very informal in that scenario. And a lot of digital banking licenses have actually been given out in various countries, and we believe that India will also see that happening very soon. Just a quick word on. I think we're probably done with most of the discussion on the world of finance and fintech. Just a quick word. I think in case any of you guys are also thinking about looking at entrepreneurship or even looking at doing new projects or new gigs, new jobs, anything like that. So I thought we will quickly touch upon that. I think think about bankers, technologists on one end of the spectrum, right? So the way to connect them typically was IT services, right? So if you go to a bank and ask them, I want to develop this, they would say, yes, I've given the RFP, Infosys or TCS will come back with a time and I'll tell you when it will get delivered, right? Well, and the bankers were very clear, yeah, this is what it is. But the technologists were like, this doesn't make any sense. Why would you give it out to somebody else? I need to build it myself. And I think what's happened is that over the period of time, this led to a lot of friction, and that's where maybe that's where probably fintech grew, where it all became something that the new startups could do, right? Wherein you were able to get the bankers and the technologists together in one room. That's what startups ended up doing, right? Uh, think about it more like it's the marriage of Bombay and Bangalore in some way, right? Bangalore being the technology hub and Mumbai being the financial hub, right? So if you think about it, the way a person in Bangalore speaks of things and the way maybe a banker would do in Mumbai would be very, very different, right? The technologist in Bangalore is thinking big data, machine learning, and the banker is saying that my IT guy is running it. I'll come back to you when this can be done. I think the way that the combination has happened is what has led to fintech, right? I spend a lot of time in Mumbai and other places where our bank partners are, but it's the marriage of these two worlds that's led to the growth of fintech, right? And I think as you think about it, you need to pick, and Mumbai and Bangalore are just representative. It could be Chennai and Delhi also for that matter. But I think you have to think about where you fit into this entire piece, and what are you comfortable with, and that's where maybe it probably helps you in your journey. But in case if you're thinking to figure out how you want to think about entrepreneurship, um, focus very sharply on customer. There are enough and more models all over the world. Lots of reading. But I think the way we started is that we actually we went to 100 companies where we sat in front of every employee and showed our product for 1 year and got feedback from them. So our product is digital, but in the initial phases, we stood in front of every company's employee base and showed them the product and did a lot of testing, retesting, come back, etc., etc., etc. And I think it was a 1 year journey for us. We faced a lot of challenges, right? So initially the challenges was, do we have enough money? How fast we should execute? Is our product going to be accepted, or is just a copy of an already what a bank is doing? Uh, or can we make it better? How do you build trust? Because finance is all about trust, and people did not know who the hell Freo or MoneyTap was, and we depended a lot on our financial partners for that bit. Uh, think about how we do acquire customers online, offline, how we deliver that. So a lot of challenges, and there are probably more. I just put down some of the thoughts that came to my mind. But that's how typically your journey works. That's it, guys. We want to spend about 40-45 minutes talking about it, and then let's keep it open for Q&A. But here are my coordinates. Happy to connect with you. And this session is probably not complete without me telling you to go download my Freo product. Freo Save is a savings app. Download it and deposit your money. You get 7%. Or Freo Pay, which is you download and you can get a QR code at 0% interest for 30 days. Or MoneyTab, which will give you credit. So please go download my products. I thought I'll deserve some 10-15 seconds for a last minute pitch. But this is what I have. Happy to take any more questions now.
Thank you for that, Anuj. That was extremely insightful, and I think people really like that. We do have a bunch of questions lined up. I can read them out for you.
No, let me go through it. I can answer two questions, I guess. So Nishchal is asking, how do digital lending startups work? Do they provide loans from their own capital and make revenue on their interest, or they tie up with bank fees? Okay, good. So Nishchal, I think this is like a classic question. Every VC asks me this question. So looks like you have a good career in venture capital. That we work, and typically there are three models that we will work with, where you tie up with banks and use their balance sheet for lending, where they give you the money, but it is their risk and their collection and etc. etc. You may still manage the process, acquire the customer, manage the experience, and so on and so forth. But the revenue there's a little bit lower, right? The second model is where you jointly take risk. So it is still the capital of the bank partner, but you take some portion of the risk. So if it's a 10% NPA, you take 5, they take 5, kind of stuff, right? There you make a larger share of the revenue. It's your underwriting, your collection is in your hands, jointly done, and you take more revenue because you're taking some risk. And the third model is where you have your own NBFC license. You can't get a banking license, but you can get an NBFC lending license, so we as a company, we do all three. So the trick is to have all three as a fintech, where then you can depend on the market scenario. You can increase your partnership with the no risk, or increase your partnership with a little bit higher risk, depending on what your objectives are. But this is how you do. And the revenue that you make could be a combination of the fee that you charge, say a one-time fee, or a portion of the interest that you charge for the tenure of the loan. But both are options are open, and that's open to negotiation with your bank partner. Is Airtel a good company for employment? Absolutely. Please go join Airtel. You'll love it. Brijesh asks, the banking sector was worstly affected by COVID, but government intervention helped a lot. Yeah, I think the banking industry, especially in the credit world, got really impacted. The payments world got massively helped. So many sectors got the benefit of COVID, and payments is one of them, because everybody wanted to have digital payments, right? So think about it. A baker in your society wants to give you cakes and is selling that to you on a WhatsApp. Now wants to accept payments. How will he or she accept payments? So they were creating Razor Pay or Pay You or Cash Free or Bill Pay or Bill Desk, and all these payment companies, they were creating these links so that you can send money, right? So payments companies saw a boost, but the credit industry saw a dip because people were losing jobs. Unfortunately, they were losing lives. They did not have money to pay back. So all the loans that people had taken up, they could not pay back their EMI. So the government came and offered, there's something called as a moratorium. which means that you can defer your EMIs. Does not mean you cannot pay, just pay it 6 months later. So if your EMI was due tomorrow, you would pay it 1 year later. That had a massive negative impact on the industry, but good for the customer. The RBI had to do what is right for the citizens of the country, and that was the right thing to do. Hi, Asta asks, I'm a qualified CA in traditional finance. Should I consider learning more about crypto blockchain? Absolutely. Learning is, you should do it. There is no reason why you should not learn about crypto and blockchain. I am personally I'm very apprehensive about crypto and crypto trading, although I put some very little money, and I would, participate in it purely opportunistically. I'll offer it to my customers on my apps, etc., etc. But I personally don't believe in the speculation side of crypto. But I do believe a big portion of the world and a lot of material services and products can be helped and be boosted by blockchain. So there are two different things in some ways, right? Crypto is just trading, and blockchain is a little bit more fundamental in some ways, right? And I think whether it be using it for healthcare or finance or smart contracts, using that is good. But today, a lot of the applications are very, very, you buy this, buy that, you go in. It's like giving cashbacks, and now it's just gamified on that. That's very transient, and it's like a fad. It'll come and go. But the applications of blockchain which still are getting developed, I think, are really good. So Upendra asks, is private locker service has any opportunity? Are you talking about DigiLocker? Then yes, please, you should go DigiLocker. I'll put you all your documents on your app, so it's pretty good. Karan asks, traditional business has any scope for entry? Absolutely, Karan. I think a lot of these NBFCs, a lot of the traditional businesses have actually figured out how they can participate in fintech. Mohammed says, do you think the recent fiasco of RBI and the PPI and BA? Yeah, I spent the last 2 weeks only talking to journalists and spoken to the RBI, as I'm part of some industry bodies. So let me be very clear. This entire PPI thing has only impacted about 10 to 20% of the lending industry, maybe 5 to 10% of the fintech industry. So we're creating a mountain of a molehill, honestly, here. It's not such a big deal. It is big in the sense that there were big companies who were promoting it massively, and there was definitely a genuine use case of that. But it's impacted only a few sort of people, and yes, we have to find solutions for them. I, as part of an industry body, I'm talking to the central bank and trying to figure out what are the answers to that question, how we can do it better. I am not impacted by it, but I'm still fighting because it's my members of my governing body have that. But I think we are reading too much into it. There are clear laws that written down by the RBI. We need to follow them, innovate around them. Obviously, we should push the boundaries of innovation. Sometimes you get called out, in which case you have to figure out what's best. But it's only 10, 20%, 25% the maximum, and it does not necessarily impact the large fintech. As you can see, the subsectors and the sector, it's large, the fintech market. PPI is like one small portion of consumer lending. Gokulnath is asking, exciting bank guarantee over the I think you should pursue it. I'm going to comment on that. Nisha says, how did you get this idea in the fintech space? Nisha, I think, in 2015, we were researching, finance was going through a revolution in the sense that, the penetration of financial products was very poor. It was largely physical. And that's where we thought we could use technology to really up the game there. And I think that is where it really made sense for us to use technology as a game changer. But we started small. We launched a credit line product first, which is very, very sharply focused on solving one problem, which is to not give you a personal loan, but give you a line of credit where you get 1 lakh rupees, which is called the money tap product. You take out 5,000, 10,000, 15,000. You pay only interest for the 15,000, not of the balance 85. And then as you pay back your EMI, the limit goes back up. So you take the money paid back, take the money paid back. It was a revolutionary new product, never done before. So we focused on trying to get the product right. It took us about a year and a half. But an idea is just a start. Honestly, by the time we finish executing it, the idea would have gone ahead, leaps and bounds. Think the starting point is to think about how deep is the market, so that if it's not deep enough, then however good an idea is, then do not get accepted. Shri Vidya, how does the bank manage during COVID moratorium? I think there were clear guidelines set up by the RBI, and they figured it out. Yeah, Mohit, someone with a non-technical background. I'm a non-technical background. I'm not an engineer. My co-founders don't come from the banking world. There's a lot of business need for operations, marketing, partnerships, running the business as such, product, would all come from non-technical backgrounds. And, it's like thousands and thousands of people are making job switches into fintech. How hard is it to partner with banks? No, it's hard in the sense that, it's a lot of hard work because their systems, their processes, their compliance stuff. But the day you figure that piece out, it becomes far easier. And I think that is the way to go. It's a moat in some way, right? We believe that we are very good at working with banks. It's not that I want to kill banks. And it's not, that's not the right approach anyways. But if you work with banks, I think it sort of will really be very, very helpful. It is hard. Don't get me wrong. You have to be at it. You have to set up processes, reviews, go talk to everybody physically, virtually, systems, set up like a weekly sync ups, etc., etc., etc. Lost it. Sorry. Someone is asking, what is a simple use of Freo? Freo is a neobank where we have deposits. So go download Freo Save, you get 7% on your deposits. We have Freo Pay, you go download it, it gives you access to a QR code based pay later solution. And we have Money Tab, which is a credit product, which you can get about ₹1 lakh credit. So please go download it and use it. Karan asked customers and business. No, we don't do business credit. Sorry. There's too many questions now. I'm sort of being lost.
Anuj, I can take over if
Yeah,
you like
think,
that. No worries, I can absolutely do that. So we do have a few more questions. I'll just take them one by one. Someone asks us, what do you think is in store for finance professionals in the future?
I mean, it's like any other professionals. Yeah, there's a market for everything.
All right. Mohammad Ashad asks us, what advice would you like to give youngsters who are using lending services?
Yeah, so there's a lending is one of those things that एक कहावत होती है ना कि चादर के बाहर अपने पैर नहीं पसारने चाहिए. It's you should not go beyond what your means are. So typically, it's unfortunate that a lot of the youngsters, want to buy very expensive gadgets when they don't have an income. So I think my advice to them is to be responsible about this. A lot of people end up buying very, very expensive things, which is way beyond their means of their income. And that puts you into a negative credit cycle from the day one. And that's not good at all. So I would be very, very cautious about that part when you deal with lending.
Thank you for that. Yeah, I think that does put an end to some of the questions. Everyone, if you have more questions, happy to answer them. Anything relevant to what Anuj has spoken so far and relevant to, fintech as a whole, please feel free to leave more questions. Anuj, I hope you have a few more minutes.
Yeah, sure.
Anuj, can I ask you a couple of questions?
Yeah, go ahead, man.
Sharan, yeah, hi. So I have two questions. One is, I come from a very traditional credit background, finance, traded credit for 10 years type of background. One of the things that I would like to understand from you is the process of the credit decision to lend or not to lend. When you bring in technology in a 2-minute, if I sort a 2-minute understanding of how different it is from a credit officer actually reviewing your credit situation and making the decision, how different it is. That's my first question. And my second question is, I'm fully conscious that you're probably a private company, and I don't know if you will answer the question, but I'll still ask you anyway. Your 7% interest that you offer on your deposit, and please feel free to decline this question. What kind of what do you have on the asset side that lets you pay that?
Right. Um, so on the underwriting side, that is the beauty of technology. I don't bypass a single credit check that a bank would otherwise do. Okay. When you download the app, we will do checks on your fraud, on your location, on your email. We'll verify it's an email or CID or not, mobile OTP, so the mobile number is right or not. We would have checked the bureau reports. We would have checked city. Only thing is not checked is the KYC before giving you a yes or a no. And after giving that takes like 2-3 minutes. But that is the beauty of technology, right? And we have done that matter. In our initial years, we used to carry this file that ICICI had taken to approve my loan or whatever. It's like this big a file that we carried, right? And all they were checking there is the name matching in the PAN, is the name matching in the bureau, is the name matching in Aadhaar. Uske liye 4 papers signed by the customer. This can be done with technology in like some nano to nanosecond, right? So therefore, the underwriting process is not short-circuited. And after that, with Aadhaar and what we spoke about, the India stack, I can do identification of that customer also on the app through OKYC, VKYC, CKYC. So the KYC also gets done. Right? Yes, some customers might need a physical visit and so on and so forth. So that's a different issue. Now, sometimes when you do physical underwriting, it also means that, if you're doing a business loan where you want to see that the guy is a genuine business owner. Not so. Some segments are different, right? Or if I'm giving like a 1 crore loan, then that's a very different thing because the ticket size is much higher. You want to go visit the person or not. So I think technology has really, really cut short this entire thing. Like there's so many SME startups that are lending in 1,500, PIN codes or whatever else, right? And giving 20 lakh rupees. So we are available in 1,200 cities, right? So I think it's been done very easily, and technology has helped there. The second question is that, so I don't actually give 7% from my pocket. I partner with Equitas Bank and they give it. And that is their standard rate that across the board RBI government. So they have the assets to give that 7%. But the important thing is not the other way, it's the other way around. You generate the liabilities so that you can lend and make money. And to generate the deposits, you attract customers by giving 7%. Because you will make far more on the asset side than the 7%. But it's not coming from my pocket because I'm not authorized to do it by the RBI. So it's my partner bank, Equitas, who has to give the 7%.
Thank you.
Thank you, Anuj. Thank you, Shiva. And Anuj, thank you so much for your time today. It's been extremely interesting, extremely insightful, especially for someone like me also, who's not from a finance and fintech background. I feel like I've learned a lot more in just the last 1 hour.